Wednesday, February 20th. Tim Haefke from Top Notch Trading in with today's MrTopStep's morning report. I just want to go through a little scenario that happened yesterday with Top Notch Trading as he was looking for a 27.5 objective to attain on any move higher yesterday. As once again, we start the week and the S&P, what's it do? Makes new year and contract highs. The recommendation was to look for the 27 quarter mini in front of the 27.5 with the possibility of shorting that. That recommendation came with after it made a 28.10 pit high, it fell back through the 27 level, and right away, smart traders, this is a real live trading idea at the time, would put a 28.75 stop in for stop loss. That stop loss is $1.50. Years and years of study says anytime you take $1.50 of risk, you need a 3-to-1 ratio, which means you needed $4.50 to equate a winning trade. So with that in mind, the objective was 22.75. Top Notch put out on that trading idea, if there was a move below 25.5 and it failed to reach the objective of 22.75, he would put a break-even stop at the 27 quarter price. Because if you're fighting an early trend that's really actually an all-day trend that was going higher, if you're fighting City Hall, you're going to lose. So with this in mind, as the trade progressed, it hit there at about 1:30 in the afternoon, or was it 12:30? Anyway, for an hour, and over an hour, this S&P future never got lower than 26. Well, wise old traders back in my day when I was in my youth learned some good old adages. And these guys would say, look it, if you're not going to see results of this trade, a scratch is as good as anything. And so Top Notch, late in the day after he couldn't see a move below 26, said to hell with it. I'm not going to let one idea ruin the overall idea. And why give these markets $1.50? It's hard enough to trade this for a living right now. So scratch the day and we moved on. So what happens? Today, the S&P comes up, overnight high of 1530 even, but the regular session sees a pit open up at 2670 to 2770, holding the 7.5. Oh my goodness. But however, we only see a 2480 low from that high at this time, never reaching the 2275 mini objective, 2270 pit objective at this time. Right now, with this, they came back up. They've had 3 attempts at their opening range today, and have failed every time. But they haven't gone down and seen no low since that 2480 low. And I suspect they're waiting for the minutes today of the Fed meeting coming out at 1 o'clock. To move on to the bonds. Now the bonds, last week, I kept talking about streamlining, how you get the flip-flop action, and they gave me a head fake. It looked like they turned, and they were ready to go to the 141 area. To be denied. 142.09 low, sees them flip-flop back and make a last week's high up at 143.30, refusing to get back into the 144 area. Now we see it come down. We make a week low right now at 142.17, and out of nowhere, they come back and rally up to 143.04. Looking at those moving averages, they keep crisscrossing, and they're not defining a move down, or they're not giving us a move up. So the streamline effect constantly is still seeing this flip-flop action in the bonds. I suspect also that they might see a more defined move moving forward with this FOMC release. Looking for it, like I said last week, there's a trend line, 2 ticks every day. Right now it's at 141.14 for an objective on the downside. And if they do want to rally them, I'm looking for 44.06, possibly to 44.28, and we'll take it from there. I also mentioned one last thing. I was going to start looking at gold, and a lot of people were saying that 1600 was going to be a good level. Me, I look at my crystal ball, and I use my charts, and I go to April gold right now, and I go back, and it's just a simple trend line. But back in the week of June 11th of 2011, and on the date of June 29th, they made a low of 1504 even. The gold rallied to all-time highs. It just took them off, just like they were crazy. Now they came all the way back down and found a trend line back in May 15th, the week of May 15th of 2012, finding 1538, okay? Bounced back up there, saw a bunch of tops up by the 1800 level. The trend line down coming right now, ladies and gentlemen, stands in at 1569 on a daily to 1568. If I was a gold trader, I'd wait for that level and I'd be looking to long gold. We'll see what happens. Have a good day and see you next week.